Morning, Steve Ray in Chicago with the morning grain comments. Well, happy Friday. For us analysts, it's going to be a busy day because at 11 o'clock our time, we're going to be getting the January 11th crop report plus the February 8th crop report. And so it'll be a lot of numbers. I think that if the Brazil crop is lowered, that might be helpful. If the China demand is lowered, that might not be helpful. In the corn, if they lower the U.S. corn crop, that could be helpful, but they could also lower the residual and ethanol demand, which may not be helpful. And in the wheat, we probably don't see anything in the wheat except maybe lower winter wheat acres that could help the wheat market. Yesterday, the trade did not like the fact that there may not be a deal by the end of the month, and the U.S. may impose tariffs on the additional $200 billion of Chinese goods. But we hope that next week the group can get together and maybe extend the talks without adding the tariffs, and maybe they could come down with a shopping list of grain goods that they start buying on an annual basis. That might actually help the market. But again, when you look at yesterday's reaction, the number one thing that we're trading in the grains is a deal or no deal. So 11 o'clock, we'll come out with another video explaining the numbers and market reaction. When we look at the March corn market, we're up about 1 or 2 cents right now. A higher trade, let's say over to 379 area, we could test 385. But below 375, we can go to 370. So we're still in this trading range. And I think that most people feel that at the end of the day, we might need to move prices up a little bit to get farmers selling to satisfy the demand before new crop. As far as the beans are concerned, March beans trade above, we need above 927 to go to 947, a trade below 909, and we test 890. And with the big global supply and lower China demand and really no problem in South American weather, maybe we should take out the 909 level and trade lower. We also feel that right now the bean-corn ratio suggests farmers may plant a little bit more beans than what we need, and we could have another billion bushel carryout next year, which really isn't bullish $9 beans. For the wheat, a trade below 512 in the March suggests test of $5, just like a trade above 519 would test 530. Yesterday, funds were big sellers in the marketplace. We think they're long 8,000 beans, short 40 oil, short 11 meal, long 55 corn, and short 21 Chicago wheat. The net position is pretty small for this time of year and reflects, number one, the uncertainty of the trade deal, but number two, there's probably too much supply versus demand to get the longs excited about coming in and buying the marketplace. So I think in general, we're starting out a little bit better as people even up before the 11 o'clock report. We'll get the numbers. We hope for a little volatility, but in general, the trade issue is number one. Then we start talking about South American weather. And I think the last thing that our market needs is on February 15th, have another partial government shutdown. As always, these are my thoughts and not those of ADM Investor Services. Have a safe and profitable trading day.